Welcome back for another look at the charts. Today we'll be going through Euro USD, GBP USD, AUD USD and Nzd USD. And with no time to waste, we start with Euro USD's 4-hour chart. In the past 2 consecutive weeks, the currency pair was characterized by an upward movement, moving to new weekly high prices, despite the fact that on a weekly basis the upward trend seems to be plateauing. At the moment, the 4-hour chart seems to display a sideways motion between the R1 1.2220 resistance and our S1 1.2160 support. Even though the pre-mentioned levels have been breached in the past days, the price action seems to return with the current boundaries. To the upside, we tend to note the R2 1.2265, which was tested but not clearly subdued from the 25th to the 26th of May. Even higher, we note the R3 1.2310 line, which is the highest resistance. However, if the currency pair is to make a turn to the downside, then below the S1 1.2160 line we have placed the S2 1.2125 support, which was used as a support throughout May. At the bottom, the S3 1.2085 line is our final level in the scenario of a selling trend manifesting. The RSI indicator below our chart is currently moving below the 50 level, implying some selling is present. We can also add that in the past week we have observed a bigger sideways movement between the R2 1.2265 resistance and the S2 1.2125 support. Looking forward, your traders should keep in mind the industrial activities data for April from Germany on the 7th and 8th of June. Also on the 8th we get the German self-economic sentiment and current conditions for June, while on the same day the Eurozone GDP revised figures for Q1 are to be released. On the 10th of June we get the ECB interest rate decision, which could move the pair extensively. Moving now to GBP USD for our chart. On a weekly basis, cable has been moving upwards for the past 4 consecutive weeks. On the 1st of June, the currency pair surpassed the yearly high price seen back in February, which is currently noted as our R2 1.4235 line, but failed to continue higher and test our R3 1.4295 resistance. In the next days of June, the currency pair moved slightly lower and is now moving in a short sideways motion within the R1 1.4180 line and the S1 1.4130 barrier. The if cable comes under selling interest, lower we have noted the S2 1.4085 support and even lower the S3 1.4035 line, which were both last seen in May, and traders may be still keeping them in mind. In our opinion, some ambiguity over the pair's further direction is evident with the latest sideways motion, yet the touch of a new yearly high allows us to keep an upward bias for cable. Traders should keep in mind the UK Halifax house prices for May to be released on the 7th of June. Moving now to AUD USD's 4-hour chart. In the past 3 consecutive weeks, the trend has been downwards for AUD USD, while in the current week so far, the movement has been upwards. In June, the price action is within the R1 0.7770 line and the S1 0.7720 support, and has tested both levels various times, making them rather important for determining the further price direction upwards. And if the bulls are to rage, we have set the R2 0.7795 line. That could be a first target. Even higher, the R3 0.7820 line is the highest level for this report, which was last seen back in May. Yet as we noted, the movement in the past weeks has been downwards, thus we tend to lean towards some bearish tendencies for the currency pair. In this case, a move below the S1 could create expectations for the S2 0.7695 support to come into play. Continuous selling momentum could even send the Aussie lower to the S3 0.7665 line that was seen back in April. No major releases are noted from Australia's side, so traders could focus on USD fundamentals. Moving now to Nzd Usd for our chart. In the past several weeks, the Kiwi has been moving in a sideways motion against the USD between our current R3 0.7280 line and our S3 0.7135 support. Since the 26th of May, when the pair rose substantially and broke above our R3 0.7280 line, the direction formed thereafter has been a gradual descent, dropping lower to the current R2 0.7255 and even lower to the R1 0.7230 hurdle, where at the moment the currency pair is trading below. In our opinion, the first support could be found at the S1 0.72 line, while even lower the S2 0.7165 hurdle were both last seen in the last week of May. Moreover, in an extensive bearish market, the currency pair could also drop to the S3 0.7135 line, which was last seen during mid-May. In our opinion, all the support levels and resistance levels noted are equally important. Moving to the economic calendar, on the 8th of June we get the New Zealand reserve assets for May, which can prove interesting for Nzd traders. At this point, we find it rather important to provide information on the USD and the environment surrounding it, as all the pre-mentioned major currency pairs are strongly affected by its movement. The most important economic data for the current week is the US employment report for May, which is to be released on the 4th of June. Caution is advised, as volatility could increase immensely. In the following week, the 10th of June seems to be the most interesting day for the greenback, as we get the US inflation data for May and the weekly initial jobless claims. According to the USD index, which monitors the greenback's strength, the USD is stabilizing at lower levels previously seen in February, while the downwards movement does not seem to have been broken yet. Thus, our opinion is that the currency is in sideways momentum with bearish tendencies. That should sum it up for the day. We hope that you found this report useful, and if so, don't forget to subscribe and to share. Also, in an effort to increase our research reports and support traders further, we are now presenting a number of live webinars, and all our followers are welcome to participate. From all of us here at IronFX, best wishes for solid trading.